There's a way you can use a tax deferment strategy called a 1031 exchange to trade an investment property into a personal residence and avoid the tax implications. Hi, I'm Rebecca. Welcome to the Mama Lorian Way and 30 Days of Money Tips, where I'm sharing strategies and information about money and wealth building that I have accumulated over the years. And in doing research for my 30 Days of Money Tips, I found out about this strategy that's very interesting. Disclaimer, I am not a CPA, I'm not a financial planner, I am not a professional like this. Always check with the people that have the right letters behind their name, CPA, when you're implementing any of these strategies. But what is a 1031 exchange? So say you have an investment property like a rental house. If you've been using it solely as an investment property, when you sell it, you are liable for capital gains on the proceeds, the profits made on that sale, unless you do what's called a 1031 exchange. And that's when you take, I'm not going to get into the details, but you take all the money that you got out of the sale and put it into another investment property. Then you can defer the taxes on your profits. Okay, interesting. But there's another very, very interesting strategy. Take the 1031 exchange. I'm going to do an example. Sell your rental property. You find a house that you really, really like, but you can hold off moving into for at least 2 years. Take the money from the sale of your rental property, buy that lovely house that you may want to move into, rent it out for 2 years as a 1031 exchange. So you really actually have to rent it out. It has to be used as an investment property. Then after 2 years, you can say, well, my circumstances changed, changing jobs, wanting to move, whatever. You can move into that house. It's now your house. And if you stay in it for at least 5 years, and always check these rules, right? You stay in it for at least 5 years, you could sell that property, and then under, I think it's called Section 121 of the tax laws, you could take up to $500,000 as a married couple filing jointly of profits tax-free. And that's $250,000 if you're an individual. So you could, over the course of 5 years, convert your investment property with all the proceeds into your personal residence, defer the taxes, and then eventually may not even be liable for them. I'm Rebecca. I really appreciate your support. Like and subscribe, and see you on the next of 30 Days of Money Tips.